If you're planning to buy a home in 2026, this video could save you tens of thousands of dollars. While some housing markets are finally becoming more balanced, others are showing major warning signs. Rising inventory, falling home prices, higher insurance costs, weak job growth, and an oversupply of homes are creating serious risks for buyers in certain cities. Now, before we begin, this doesn't mean these places are bad places to live. Many of them are great cities. But if you're buying a home as an investment or simply don't want to watch your home's value decline, these are markets where you should be extremely cautious. Let's count down the 10 housing markets buyers should avoid in 2026. Number 10, Phoenix, Arizona. Phoenix exploded during the pandemic. Home prices skyrocketed as remote workers flooded the area. But today, the market has shifted dramatically. Inventory has climbed substantially compared to pandemic lows, giving buyers far more options. Homes are sitting on the market longer, and sellers are increasingly cutting prices to attract offers. The combination of higher mortgage rates and affordability challenges has slowed demand significantly. If you're buying in Phoenix today, don't expect the rapid appreciation homeowners enjoyed between 2020 and 2022. Number 9. Austin, Texas. Austin has become one of the biggest examples of a market returning to reality. Builders constructed thousands of new homes over the past few years, creating much more supply than buyers have become accustomed to. That means buyers now have negotiating power. Price reductions are common, incentives are everywhere, and appreciation has slowed dramatically. Austin remains an excellent city with strong long-term fundamentals, but in the short term, buyers could see limited price growth while inventory continues working through the system. Number 8. Dallas, Fort Worth, Texas. Dallas shares many of Austin's challenges. The metro added an enormous amount of new housing inventory over the past several years. While population growth remains strong, supply has finally caught up. That means buyers have more choices than they've had in years. Price appreciation has cooled considerably, and sellers who are still expecting bidding wars are often forced to reduce asking prices. For buyers looking for quick equity gains, Dallas may not be the best bet in 2026. Number 7. Nashville, Tennessee. Nashville was one of America's hottest pandemic housing markets. Unfortunately, what goes up quickly often cools quickly. Affordability has become a major issue. Mortgage rates hovering around the mid-6% range have priced many buyers out of the market, reducing demand just as inventory has increased. Home values aren't collapsing, but appreciation has slowed dramatically compared to the last several years. If you're buying here today, don't expect another pandemic-style boom. Number 6. Denver, Colorado. Denver continues facing affordability challenges. High prices combined with elevated mortgage rates have made it difficult for many first-time buyers to qualify. At the same time, inventory has improved considerably compared to recent years. That's good news if you're shopping, but it's not necessarily good news if you're expecting strong price appreciation after closing. Many experts believe Denver is entering a much slower growth cycle than it experienced during the previous decade. Number 5. Cape Coral, Florida. Florida dominates this list, and Cape Coral is one of the biggest reasons why. Home prices surged during the pandemic, but now many of those gains are reversing. Insurance costs have skyrocketed. Flood risks remain a concern. Inventory has ballooned, and buyers simply have far more leverage than they did just a few years ago. Several housing data firms have identified Cape Coral among the markets experiencing some of the sharpest home price declines in the country. Unless you're planning to stay for many years, this is a market where caution makes a lot of sense. Number 4. Punta Gorda, Florida. Just north of Cape Coral sits another struggling Florida market. Punta Gorda has seen declining home values, increasing inventory, and continued pressure from insurance premiums. Many homeowners who bought near the market peak are finding it difficult to sell without lowering their asking prices. Higher ownership costs are discouraging many new buyers, keeping demand relatively soft. It's another example of how quickly some pandemic boomtowns have cooled. Number 3. Naples, Florida. Naples remains beautiful. It's wealthy. It's desirable. but it's also becoming increasingly difficult to justify current home prices. Luxury markets often react first when affordability tightens. Higher interest rates, increased insurance premiums, and a growing number of listings have softened demand. Price corrections have already appeared across parts of Southwest Florida, and Naples remains one of the markets analysts continue watching closely. Number 2. Miami, Florida. Miami has incredible international appeal, but from a buyer's perspective in 2026, there are several warning signs. Insurance costs continue rising. HOA fees have increased sharply for many condominium owners. Property taxes remain expensive, and affordability has become one of the biggest barriers in the country. While Miami isn't likely to crash, buyers purchasing today should understand they're entering a much slower market than the frenzy of 2021 and 2022. Paying top dollar today could leave little room for appreciation over the next few years. Number 1. Northport, Florida. Northport saw one of the largest pandemic-driven market booms in the country. Unfortunately, that also means there's been more room for correction. Inventory has increased significantly. Price reductions have become common. Demand has cooled, and housing analysts continue identifying Northport among the weakest performing housing markets nationally. It's a perfect example of what happens when prices rise much faster than local incomes can support. For buyers hoping to build equity quickly, Northport, Florida may be one of the riskiest markets in America right now. And there you have it. The 10 housing markets buyers should avoid in 2026. But here's the biggest takeaway. Just because a city made this list doesn't mean it's a bad place to live. Many of these markets have strong long-term potential. But if you're buying in 2026, it's more important than ever to understand what's happening in your local market before making one of the biggest financial decisions of your life. Nationally, most experts expect home prices to remain relatively stable, but real estate has always been local. Some markets are dealing with rising inventory, others with affordability issues, and some are still correcting after the pandemic housing boom. The smartest buyers aren't asking, "Is now a good time to buy?" They're asking, "Is this the right market to buy in?" If you found this video helpful, make sure to hit the like button and subscribe to the Housing Brief, where we break down housing market trends, real estate news, and the latest economic data so you can make smarter buying, selling, and investing decisions. Also, let us know down in the comments, which housing market do you think is the most overvalued heading into the rest of 2026? Thanks for watching the Housing Brief, and we'll see you in the next one.